Hi traders, you're welcome to this video. So in this particular video, we are going to be looking at an essential GBPUSD trading strategy that is perfect for mastering the price action of this currency pair. Okay, but before I proceed, please note that this strategy is not foolproof. All right, it does not guarantee profit, but it can be an effective addition to your trading strategy. Okay, now whether you are new to trading or just want to sharpen your strategy for GBPUSD, this video has got you covered. All right, let's get into it. Now GBPUSD is one of the most actively traded currency pair. Is one of the most actively traded currency pairs in the forex market, but it has its own quirks and behavioral patterns. Okay, and it has some patterns that actually set it apart from other pairs. So in this video, we are going to be breaking down the exact steps that you need to make better trading decisions when trading the GBP/USD pair. Okay, from understanding market structure and price action to knowing when to enter and exit trades, we are going to cover it all. Now, first of all, let's talk about why GBP/USD can be a bit different compared to other major currency pairs. Since it combines the British pound and the US dollar, it reacts heavily to economic data from both the UK and the US. Okay, now the sessions that have the most impact on GBP/USD are the London and New York sessions. It's very important for you to note these. All right, it is one thing to know technical analysis, and it's another thing to know the best situations to apply your knowledge of technical analysis. Okay, so if you have the knowledge of price action but you don't know the particular or the best period to apply that knowledge, then you can be missing out on some good opportunities. All right, so it's important for you to know the best sessions to trade the GBP/USD, and such sessions are the London and the New York sessions. Okay, so if you're trading this pair, it's essential to keep track of economic events like interest rate announcements, employment reports, and other key data releases during these times. Now let's jump over to the charts. Okay, for this strategy, we are going to use a pure price action approach, meaning we are not relying on indicators that can lag behind the price. All right, instead we'll focus on identifying key support and resistance levels. Now we are currently on the 1 hour chart. Okay, we are currently on the 1 hour chart, and then we're just going to be identifying key levels. This strategy is going to be based on support and resistance levels. Okay, so you can see some support and resistance levels that we've already identified. You can see these are levels of rejection. These are points of rejection, right? Points where price got to and got rejected. As we can see, there was rejection. And one thing for you to know is that these support and resistance points are actually zones, right? They are zones. Okay, the reason why they are called zones is because you might not find a reversal just from one particular point. For example, this place was a resistance zone. We had a rejection here, here, and here. It was not exactly at one particular line that the rejection happened. Another example is here. We can see that we had some rejections around this zone as well. We can see there was a rejection here, there was a rejection here, here, and here. It didn't happen exactly at one particular line. Okay, it was a zone. It was a zone where the rejection happened. So even though you can use a line to identify a support level or a resistance level, just bear in mind that those are actually zones. Okay, now we can see that these are zones where rejections were happening for the GBP/USD pair. All right, now it's important for you to mark out those rejection points on your chart, okay, and make them the foundation of your strategy. Now once you've got your support and resistance zones marked, the next step is timing your entries. Okay, now candlestick patterns are incredibly useful here. You might want to look for patterns like the pin bars, engulfing candles, or inside bars forming at these key levels. Now for example, in this particular rejection point, we found a doji. In fact, we found, yeah, this is a doji. You can see this is a doji that formed here. You can see it. This is a candlestick pattern that represents a reversal. So as the price of GBPUSD got to this resistance zone, a doji formed. Okay, so we can use that to uh to determine our entry point. Okay, let's say we are at this strong resistance level and we see this doji form. Okay, that's a sign that sellers are stepping in, and it could be a good time to consider a short trade. Okay, however, always wait for the candle to close before entering, though, because you want confirmation that the market respects this level, because impulsive entries can lead to freakouts and bad trades. So as this doji closed and we even saw the next candle was a bearish candle, we can consider entering a sell after this bearish pattern formation. After you enter a sell here, setting our stop loss above the resistance zone would have been a good decision. Okay, we can just set our stop loss above the resistance zone, and then we can target the nearest support level for our take profit, which would have been here. Okay, so if we had done that, we would have caught around 50 pips. That's a good catch. Okay, we would have caught about 50 pips. So basically this strategy revolves around support and resistance zones. Knowing when to exit is just as important as when to enter. So with this strategy, the best time to close your trade is usually when the price reaches the next significant level. That is the reason why we are going to be exiting our sell trade, which we entered around here. We're going to be exiting it around here. Okay, now in the case of a buy trade, we can see that we had another support zone here. So let's say we had a signal to buy, and that signal would have been after this bullish candle formed, because after this after the price got to the support level, we can see that there was a small candle, and then after that we had a more prominent bullish candle. So that would have been the confirmation candlestick pattern, and would have entered the buy somewhere around here. Okay, if we had entered the buy around here, if we are going to stick with exiting at the nearest key significant level, then we would have exited our buy trade around here. Okay, however, one thing to note when determining when to exit your trade is the direction of the trend. Now, if it is a trending market, for example, if it is a sell trend, a strong sell trend, then you can also decide to exit your sell trade at either the nearest significant support or the next support, because it is a strong sell trend. Okay, but if you are trading the counter trend, then always make sure you use the very next significant level. Okay, for example, now this is let's just say this is a strong trend, right? A strong sell trend, and we had entered a sell around here. Now if our risk to reward ratio is not good enough for us to exit here, because the sell trend is strong, we can target the next support after this. All right, now in the case of a ranging market, just target the very next significant level, because the price could reverse immediately after getting there. So that is one important point for you to note. Okay, and always remember, if the initial reason for entering a trade changes, like unexpected news or reversal patterns, it's often best to exit. All right, trade based on what you see, not what you hope will happen. Okay, now a strategy is only as good as your risk management. For GBPUSD, I recommend risking no more than 1 to 2% of your capital per trade. Forex can be highly volatile, and GBPUSD especially can see big moves. So keeping your risk tight ensures you are in the game long term, even if you hit a few losing trades along the way. Okay, finally, patience and discipline are key. Even with a solid strategy, the market can sometimes throw you a curveball. Now, it's important that you stick to your trading plan and avoid over trading. Okay, when you stay disciplined, you'll see better results over time. So there you have it. It's a straightforward but powerful strategy for trading GBPUSD using pure price action. Take these tips, apply them to your own trading, and see how they work for you. Let me know in the comments if you plan to try this strategy, or if you've already been trading GBPUSD. And of course, if you enjoyed this video, make sure to hit that like button and subscribe to the channel for more trading strategies and forex tips every day. Until next time, happy trading and thanks for watching.